Happy hump day, everyone. Welcome back to another episode of Benzinga Powerball. Yes, this is your rapid fire show where every day you get a disaster of the day. You get a wild winner. You get a hot pick. And today, we're going to have a very special guest joining us. All right, kicking it off. Disaster of the day. This one breaks my heart a little bit. It is going out to GameStop, ticker GME. Nobody needs to be reminded of that ticker. Stock is down today. It's down about 15% on the heels of quarterly earnings. Company reported their Q4 results. What really bugs me about this one is that after a strong Q2, Q3 and Q4 both declined on a year-over-year basis. I had a glimmer of hope when I saw that Q2 print. It looked like we had some nice year-over-year growth. Okay, is the turnaround story starting to happen yet? We've been waiting on it for a couple years now. I think it's been a revenue decline since about mid-2022. This quarter did not get us there. Again, second consecutive quarter with a year-over-year drop. And for that reason, down 15% today. GameStop is your disaster of the day.
Yeah, not a great report from GameStop last night. I will say a few things here, Luke. Before I'm ready to, bury GameStop, say it's a dead story. It still did $1.5 billion in revenue. So I don't know where all that revenue is coming from because, I game a little bit. I got friends that game. I don't think any of my friends are still going into a GameStop to buy video games. But again, 1.5 billion. Not nothing. So, we'll keep watching this story here. The other thing from a fundamental perspective is you have more and more popular video games now going the Fortnite freemium model where the game is free to download and then you have in-game purchases like skins and stuff like that. So I don't think that's great for GameStop, but again, still did over $1 billion in revenue. We'll keep watching this story. All right, Luke, let's move over on the flip side, we got our disaster of the day. Now let's find our wild winner. What do we got today?
This is, in my opinion, the best stock market story of the year thus far. Hate it or love it. I'm not really on either side. I just love the excitement and the madness of it. It is ticker DJT. That is Truth Social going public yesterday. Huge IPO valuation. Huge opening print. Stayed strong throughout the day. Going to day two, stock is up 18%. This values Truth Social right around $9 billion. What makes it even wilder is we got that $9 billion market cap on the stock with about $5 million a year of revenue.
Let's do the math on that real quick. $5 million a year in revenue. How many years does it take to get you to the $9 billion valuation?
200 years.
200?
180.
All right. Life expectancy is going up, so.
Yeah. Again, it's a fun one. This is the best stock market story of the year. Again, hate it or love it. You cannot deny that Truth Social, ticker DJT, is the best stock market story of the year. It is a great trading opportunity for anybody who's trying to make any of those intraday trades. Speaks to a belief in Trump. It speaks to a belief in social media stocks. We're looking at Meta sitting right around all-time highs as well. Twitter, by comparison, was doing about $2.5 billion in 2023. Elon Musk bought the company for $44 billion. So you can infer about a 20 EV to sales there. But again, Truth Social, ticker DJT. I want to throw this one out to the chat. If you think that this is a great stock market story, just a great stock market story, put a 1 in the chat. If you hate it, put a 2. I'm curious where everyone falls.
Well, it's similar to the first stock we talked about, GameStop, where you have a company trading, not on its valuation whatsoever, but on, hype and all this other stuff. And, like you said, it's the story behind it. If you want to trade it intraday, like you said, Luke, you can maybe make a few bucks to the upside, maybe make a few bucks to the downside, but I wouldn't be holding this stock just because, again, Reddit also went public last week. Reddit did about $1 billion in revenue in 2023, has 850 million active users compared to Truth Social's 5 million users. So, you're talking about basically, more than 100 times the amount of users and revenue. And yet Reddit's valuation is only twice that of Truth Social right now. So there's this clear disconnect between valuation and where the stock is trading at. So for that reason, I would not feel comfortable holding this stock overnight as a swing trade, whatever you want to do. But if you want to trade it intraday, have some fun with it. It's a fun story.
It's a fun story. All right, this is your rapid fire show. We talked about a disaster today. We talked about a wild winner. I'm keeping us clipping down to a hot pick. It's a stock that we called on this show about a month ago. Share price $12. I'm talking about Robinhood, ticker HOOD. Hood. Today we're sitting right at about $20. News on Robinhood. Last night they had an Apple-esque presentation where they announced a product launch. It's the first time that Robinhood has done this. Handful of features and enhancements to the platform announced. Big news coming out of Robinhood was the credit card. When we talked about this pick and we went into more detail about a month ago, a lot of the thesis was about Robinhood being the future of money. We look at Hood right now. It does about $2 billion a year of revenue compared to about $20 billion a year that Charles Schwab does. It's about a $17 billion market cap after today's run up versus about $130 billion market cap on Charles Schwab. I fundamentally believe in Robinhood as a future of money. I've known the Robinhood team personally and watched the story from pre-launch through IPO, through GameStop to today. I still think from our growth of when we call this one from $12 to $20 today, there is still upside there. The credit card speaks to Robinhood becoming that future of money. Additional revenue stream just opened up, launching in the next couple of weeks here. And for that reason, our hot pick of the day is once again Hood.
Yeah, and I talked about this on pre-market prep this morning. Hood has done a great job of offering like real value to customers over the last few months. Not only did the company announced an IRA match where if you transfer an IRA from a different account to Robinhood, they will give you 3% of that account for free. There is a lockup period there. But I mean, if you have $100,000 or something and you transfer it to Robinhood, then you have 103. That's free money. That's not nothing. And then the other thing they're doing that I love, and other brokerages are doing this too, but if you have cash sitting in your account, you're getting 5% interest payments on that cash. So I'm like, why should I even get my check direct deposited in my Bank of America checking account that gets no interest? I could just get it directly deposited to Robinhood and make some extra money. Like, I think there is some real tangible value there to users. The one flip side, I will say, is that I think a lot of this run up in the stock that you've seen, a lot of positive metrics we've seen from Robinhood recently, have been from the crypto rally that we've seen in the past, few months. So that would scare me a little bit that if we see some excitement, some hype come out of the crypto market, that you will see that reflected in Robinhood's share price. So that's the one thing I'm a little bit tentative, scared about, is just how much of this run up from, you look back, Luke, the stock was trading below $8 less than 6 months ago. I mean, how much of this run up is due to the crypto resurgence, and what happens if that crypto resurgence goes away?
Fair. All right, guys, this is Benzinga Powerball. This is your rapid fire show. We talked about a disaster of the day. It's GameStop. We talked about a winner, wild winner. It's DJT. We talked about a hot pick. It's Hood. And now joining us, we have a special guest, Mr. Jeff Parks, joining us from Stat Capital. Jeff, how are you doing today?
Good, thanks. Thanks for having me. Thanks for having me today.
Absolutely. And for those of us who aren't familiar, can you just give us the elevator pitch on what exactly Stat Capital is?
Yeah, publicly listed entity under TSX STCK, so listed up here on the Toronto Stock Exchange. We do have a pink sheet listing, STCGF in the States. And what we want to do is we want to democratize access into growth in late stage businesses. So think of your SpaceXs of the world. Think of your robotics. We have a robotics company, Locus Robotics. We also have a big travel and leisure. Hopper was one of our portfolio companies. So we're trying to get you those companies in the private market before they IPO. And you can see out there in the market, like the Reddits of the world, the A Labs of the world. It's always nice to get an allocation of one of those on an IPO, and it's pretty darn hard to do. So you can basically do that by backdooring into us being publicly listed on the exchange.
Awesome. So Jeff, I've got two things that I want to talk about. I want to talk about the IPO market. I also want to talk about the private market. Starting us off with the IPO market. S&P 500 is at all-time highs. It still seems that there's sluggishness in the IPO market. What is your take on that? When do we see the turnaround? Where in the cycle are we? Give us your general view on IPOs.
I think you had some sluggishness in like call it Q4 of 2023, and obviously sluggishness in this first quarter. And you saw Birkenstocks, you saw Klaviyo come out, you saw Instacart come out, right? They didn't trade really well. You didn't see those huge pops and people get excited about those businesses. Now, some of those businesses had that kind of COVID effect where, like an Instacart, everyone's sitting at home, they're shopping, they're buying on Instacart, right? So tougher business to bring public at that point in time. But now in the last like 2 weeks, you saw ALAB be like your real first AI business go public, traded extremely well. Like the stock's almost up, I think it's up north of 100% as we sit here today. Same thing with Reddit. Reddit's been private for such a long period of time. They went public as well, received extremely well by the public market. So I think with those two being a nice barometer for the IPO market, I think you're going to see a wave of new issues come in. You're really like firing up that Wall Street engine again. People are getting excited. They want access into these things. They've been private for a long time. So I think you're really going to see just a lot of companies say, hey, they worked. Let's bring our companies public because we've been waiting a long time.
Got it. So just to recap, essentially, you're saying now that we've seen some of these IPOs work in a big way, that gives maybe the confidence boost to shareholders, to executives at some other companies that have been sitting on the sidelines waiting, and will encourage them to hop in. Is that fair to say?
Exactly. You hit the nail on the head there.
All right. Let's flip it over to the private market side of things. Clearly you are out in the marketplace sourcing deals, sourcing allocation, getting your investors access to these private companies. How have valuations and how has appetite looked like in the private market?
Before, if you were looking at like 2021, the private market was the hottest market out there. Everybody
It was amazing.
Yeah, you were lucky to get an allocation on these deals. Companies are sitting there saying, I don't know if I need you on my cap table. You're lucky to get an allocation. Then tables turned. Money wasn't free. Interest rates went up, and people were like, okay, there's a cost of capital here, right? Like if I want to go and I want to buy something, it's a lot easier because there's more scarcity value in cash out there. So when you looked at your bid ask in the private market, it was as wide as a barn door, right? But over the last, like, call it 6 months to a year, you start to see that heat back up. There's really good deals out there. Companies need capital, right? You had such a capital runway, but now they're forced to come back because a lot of these companies, as you know, they burn in the private market. There's a lot of push to, hey, we need to get to profitability, so we don't need to rely on raising money in the private market. But you're seeing a lot of activity over the last like 3 months. And this really picked up too after these companies IPO'd, and people were like, the private market, like we can actually get liquidity. These companies can go public. So there's a lot of excitement behind it right now.
Okay, so that's a perspective from the company side of things. What about from the investor demands side of things? I witnessed firsthand, 2020, 2021, significant demand from investors to get into private deals. How has that evolved over the past couple of years, and where do we sit today?
In terms of individuals trying to get involved, or in terms of like company wise, like where are you coming from on that?
Capital demand for private.
Oh
How has
yeah,
that evolved?
there's a ton of capital. There's always a lot of capital for like your blue chip or your blue chips, right? Those are the SpaceXs of the world. Those are the Stripes of the world. Those companies are just rock solid businesses. They did take hits on valuation. SpaceX no, but Stripe yes. But there's just these companies like the private equity of how much capital is on the sidelines and how much capital needs a home. There's huge demand for these businesses, and they've been able to stay private for such a long period of time, right? Like some of these businesses have been private for like 10 plus years because they can get the money in the private market. They can do tender offers. They can get their employees liquidity. But at one point, these things do need to come public. So you are going to see that barrage of companies coming public down the line.
And so let me ask this again from the investor side of things. If we look at today versus a year ago,
Yep.
Would you say that there's more or less investor demand in the private market?
If you were versus 2020, 2020 was just off the charts, right? Like it was insane how much money people were throwing at private companies. So I would say it's down from there. If you're not a blue chip company, it's still harder for you to raise that underlying capital. But for the blue chip guys, like you should see some of the demand on some of these deals. Like you're talking multi-billion-dollar deals moving in terms of secondary in the private market right now.
Jeff, I mean, I've talked to a lot of public market investors that have talked about, the Russell 2000 small caps still continuing to underperform your mega caps out there right now. And a lot of them, say like, look, small cap companies are small for a reason. How, when you're looking at these small cap companies, do you decide which ones are worth investments, especially because you can be right on the trend, right? You can pick a robotics or AI company and be in the right space, but if you don't pick the right company, it might not work out. What are your biggest like red flags and green flags when, prospecting some of these companies?
A lot of the stuff is like proven product market fit, and you want it to hit like a certain level of like revenues. If somebody's coming to us and like, hey, we have a business and it's only doing $5 or $10 million revenue. How do I know that that has proven product market fit, right? It could be like a cloud diagram on a chalkboard. I have no idea that that thing's going to be the successful winner in there. If you're pushing on $100 million plus of revenue in that business, you're like, okay, something's sticking here from a product wise.
Right.
And if you see that consistency of growth too, you don't just want it to be a blip where it's like 1 year you grew 45, 50%. Okay, great. Then what happens in the next year? Like you need to see that consistency and growth. And you need quality management teams that know how to take something that's small and turn that into a big underlying company. Because if you don't have that skill set of, hey, we're a $10 million company today, but we're trying to be a billion or $10 billion company down the road, you have to rely on those individuals. And I would say that that's one of the biggest keys.
I mean, do you have specific trends or sectors that you're, primarily looking in right now, or is it basically just across the board? If any company can show you that criteria, you're interested in it.
We'll look at just about anything. Like we're not going to do biotech. Like I don't I don't have
That's tough.
the,
I mean,
yeah, I don't have
Get
the
a
interest of
PhD, Jeff.
exactly. I don't have the interest of waking up one morning and something's down 75%. You're like, okay, like that, well, that was some binary risk. That didn't work out too well. Now, obviously, you can go the other way and it's fantastic. But I would say trends that we're looking at, I think that it is one of the most unbelievable trends is the robotics businesses. They are fantastic out there right now. So we have all these AI businesses that have huge valuations. There's definitely some interesting companies within that sector, but it's like, how do you take those LLMs? How do you take that AGI one day? How do you apply that to the real world? Right. So there's a lot of robotics companies that we're invested in one Locus, and we're in their jacket right now, which is like you have labor issues in terms of people wanting to work in third party logistics warehouses in the States. Like people don't want to go move around boxes all day. So, hey, if there's a robot that can help them out and do that and make their job easier, that's a great business. So I think the robotics area of bringing AI to like real world applications is an unbelievable area right now. And you're already seeing it with like companies like Figure AI, right? They raised
yeah.
$600 million plus at a
That's got to be
two.
the quickest like valuation to $1
Oh,
billion
yeah.
I've ever seen in my life. The company was founded in 2022 and it's already valued at more than $1 billion. I mean, you got Nvidia investing in it, et cetera. Like I've never seen a company be valued that much in such a short span of time. Have you?
The only other ones that I've seen that are similar to that are the LLMs, like the Anthropics of the world, like the OpenAIs of the world. They're valuing
Okay.
like OpenAI obviously longer, Anthropic extremely quick, but they're unbelievably scalable on the LLM side.
Yeah. Well, and
Robotics
Figure AI
businesses are tougher.
Figure is already putting out like you saw that video of the robot like putting dishes in the thing the other day. Like they're already, I mean, they've only been around 2 years, but they're already putting a product out there basically.
I honestly think one day that everyone, like security guards, will be robots. You'll have robotics armies with the Department of Defense saying, "Hey, why are we putting individuals into a theater of war when we can put these robots?" Or you have a robot maid, or you have a robot servant in your house. Like, I think at one period of time that's going to be here. Now, do I think that's going to be in the next 2 to 3 years? Me personally, no. Do I
Right.
think that's like 10 to 15 years out? Because I don't know. You got to trust that robot in your house, right? Like, you're shaking hands with it and it crushes your hand. Like, it could get out of control.
Yeah, a little scary, but exciting all at the same time. What about just from an overall market perspective? I mean, I know you're, dealing with a lot of small companies. Do you expect like what are we waiting for smaller companies to start getting some more wind behind their sales? Is it just interest rates? Are there other factors at play here?
I honestly think interest rates are one of that's basically like the top end, right? Like now we can actually price risk. We don't need to worry about, hey, is there going to be 50 basis point increase? Is there going to be 75 basis point increase? That was annoying, right? Now that we're like kind of like flatlined, we can
Right.
price that risk. Like It's probably to the downside, and more so focused on interest rate cuts. But I definitely think that's one of the biggest pieces that's going to help the underlying market. And just like even more platforms like the Robinhoods of the world, right? Helping people get involved with these businesses from an earlier perspective. I think that's fantastic. A company like Stack helping people get involved in the private markets where you're probably never going to get an allocation on an IPO, right? Like this is one amazing outlet to be able to do that.
Got it. Yeah. I mean, that's one of the things, we've seen a lot more access to retail investors throughout the years. That's one area where we're still kind of lacking, where it's like, look, everyone wants to find the next Apple and invest early. Everyone wants to find the next Nvidia and invest early. You guys at Stack are actually working on that. You're working on that, Jeff. So we commend you for that. Again, if you're watching this, go check out Stack Capital if you're interested in investing in some of these companies pre-stage, again, through Stack. Any other advice for retail investors that are looking to try to kind of get in early?
Honestly, just Twitter is fantastic for finding interesting spots early. Same thing with you guys. You guys highlight a lot of really good companies. So it's following those individuals who are finding these things early. That's very, very helpful for people.
Do you have any specific favorite follows on Twitter for that type of stuff?
I always do love following Elon. He's got fantastic posts out there. But there's like the whole FinTwit community. Like there's amazing, like just little pockets of people talking about small cap companies on the public side that you're like, wow, I didn't think about this. And this guy's been kind of pounding the pavement on it. Like I should get involved here. So
yeah, my buddy actually put out like a research report on a small cap energy company that was like a $200 million market cap. And he just put it out there on Twitter from like an anonymous Twitter. Within like 2 weeks, he was on the phone with the CFO of the company because they were like, oh, we liked your report so much. So it's crazy. Like to your point, Jeff, just what you can do on Twitter, use it as a networking tool. Luke, we got to get you back on FinTwit, back active on there.
It was a lot more fun in 2021.
It was a lot more fun in 2020.
I can imagine.
When everyone was making, thousands of dollars a day. There were no losers. It was all a big party. Oh, man.
Awesome. Well, Jeff, I appreciate you joining us on Benzinga Powerball.
Yeah, thanks so much for having me. I really appreciate it, guys.
Absolutely.
All right, guys. Again, that was Jeff Parks from Stack Capital, publicly traded on the Toronto Stock Exchange, as well as the pink listing here in the U.S. That was a fun interview. I love talking about like early stage company because that's where, it's fun to hold the Metas and the Apples of the world. Yeah. But like look, we're both young, Luke. We've got, we can buy something now and hold it for 30 years. Why not take a shot on some of these like smaller growing companies?
Well, I could.
Yeah, that's already a $15 billion company, though. I'm looking for smaller, baby.
I was thinking Hood is a 5-bagger.
So 17 bill to 75. I could see it. 85. All right. I mean, look, anyone, if you're watching this and you've got some small cap investment idea out there, I don't care what stage it is in, whatever. I'm looking for something like sub-billion-dollar market cap. Hit my line, Aaron Bree 5 on Twitter. I'll be there. You can email me, aaronbree@benzinga.com. I don't really have a lot of capital to deploy, but the capital I do have to deploy, some of it's Luke's. I will, I'm looking to spend it.
All right, we'll make it happen. Happy trading, everyone, and we will be back at noon Eastern tomorrow.
Boom. Smash the like.